All right, we're now back with an end of day pulse wave report with yours truly, the Algo Capitalist, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports. Now, tomorrow is the big day, FOMC. We're going to find out what the Fed's thinking is on the economy. We're going to find out if they're going to raise rates and by how much. But more importantly, what is their outlook? That's what people are going to be looking for. What is their outlook? So we have the uncertainty going into tomorrow. We don't know what we don't know. You can look at the market, and the Fed funds rate futures will show you that their market is expecting 75 basis points. But what if we get a full 100 basis points or 200 basis points or five? I mean, the Fed can do anything they want, and they can shock and awe the world. So we just don't know what we don't know. So we don't know what they're going to do. We don't know what their true feelings are about the economy and the markets, and we don't truly know what they plan to do, what their long-term plan is to address this. And then furthermore, what we don't know is we don't know the market's reaction to the news. So generally, markets can fall on good news, or they can rally on bad news. You just never know what the thinking is, the consensus, when you look at the markets in general. So tomorrow is going to be very interesting to see what the market response is going to be. It could be pretty bad. As we know, we're in uncertain times. The war is on. Will there be a rally into the end of the year and then we have the reckoning in January? Or is the market saying, forget the rally, no more rally? The market wants to roll over starting now and then get even worse in January. Both can't be right. So far, it's looking interesting. So we're just going to take a look just at a couple of charts. It's going to be a really quick video. I just want to look at some key indicators for tomorrow. Now, the dashboard has been updated. All right, so the reports are out. So let's start this. Let's start with the obvious. Everyone wants to know what's going on with Bitcoin. So let's take a look at Bitcoin first. Like I said, this is going to be a quick video tonight. I just want to show you where we are and what the potential is for tomorrow. Okay, so Bitcoin is already showing itself to be a breakout candidate for tonight into tomorrow's trading. Now, we do have a rally alert for tomorrow, but the market is also in a downtrend, and we just hit a new 52-week high yesterday. I'm sorry, I said high, 52-week low. So we're hitting new lows, new 52-week lows, and then we're at this draw, this neutral position going into the announcement for tomorrow. So Bitcoin is showing you clearly here that it can break down and or break out tomorrow. It can do either or both. We don't know. So we have a neutral for tomorrow with a slight edge going to the rally alert, because we do have a rally alert. So that's what we're looking at for the Bitcoin for tomorrow. It goes anywhere. Bear market, trading below the Kumo cloud, and it is what it is. So that's Bitcoin. Now, if you look at Ethereum, we've had all the information, all the thing going on with Ethereum. And if you take a look at where Ethereum is, it's showing you that it is below the Kumo cloud as well. And you had the little pop-up today to kind of close the gap that we had here. And it has a rally alert on it as well. And it's also in a bear market. The nod's going to go here for a rally alert for tonight into tomorrow's trading, but it's also a breakout candidate, meaning that it is neutral position. It can go both up and down tomorrow. So you can expect increasing volatility in Bitcoin and Ethereum for tomorrow. I see you with the Litecoin. Let's see here. Here's Litecoin. All right. So Same thing with Litecoin. Litecoin, Bitcoin, and Ethereum, identical chart. You got a rally alert for tonight into tomorrow's trading in the Litecoin, and it's a neutral breakout candidate, meaning that it can both break down and break out, and most likely it will do both with increasing volatility going into that announcement. So, very interesting turn of events, how markets have now moved themselves into neutral positions ahead of the news. Well, can we get an idea of what may happen regardless? Let's see. If you take a look at the euro yen, which is a proxy for the S&P 500, it can give you kind of an idea of what to expect tomorrow. Now, according to the euro yen, for tonight into tomorrow's trading, the bias goes to the bears. We're expecting sideways to lower prices. It's in a neutral position. So we're not really expecting anything to happen here except for more sideways action with a little bit of bearishness caked in. Even though you're in a bull market, but you are in a corrective state right now. Can the market pop itself out of correction and relock in on the bull side? Absolutely. Or can it fall? It can do both. You are in a neutral position in the euro yen going into tomorrow's announcement. You can't make this stuff up. This is what the market has done for itself, put itself in a neutral position. We're seeing a lot of neutrality going into tomorrow. What about gold? Surely gold and silver should really just take off like a rocket with hyperinflation and whatnot, right? Wrong. Gold and silver has put themselves also in a neutral position going into tomorrow. Take a look at this. Flatline today. You were a neutral position coming into today with the possibility of going both up long, up and down, market rally, fizzle, then crash and fizzle, then fizzle flat. And that's exactly what you got here. You got a flat day, and it's also neutral position going into tomorrow. You just cannot make this stuff up. This is what the markets have decided to do for themselves going into this possibly historic announcement. Here's silver by way of SLV, also neutral going into tomorrow. Now, the edge goes to the bears, right? But you're in a neutral position. All right. If anything is possible, this market will probably go down. But who's to say? You're in a neutral position in everything that we're looking at. Okay. So I'm flat going into the announcement. I mentioned that yesterday. I think I even mentioned it on Monday. All right. I am flat. I am not doing any trading ahead of this possibly historic event. All right. On the scale of 0 to 100, this one is 100. This is getting a reading of 100 with the possibility of being the most off the hook historic announcement in decades. So, for me, I don't want to play myself getting ahead, step in front of a speeding train. It could cause the report tomorrow can cause the markets to just crash, or it could cause the markets to explode higher. I don't know. It's a neutral, and the markets are putting themselves in a neutral position tomorrow. So I'm not stepping in front of the train. I'm going to let the market do what it do. Let the dust settle. Let the announcement come out. I don't know if there's a press conference tomorrow after the announcement too, but either way, you would do well to step aside and then let the dust settle, and then you're able to get in the market. All right. So again, neutral. So we got neutral on Bitcoin, neutral on Ethereum, neutral on Litecoin, neutral on gold, and neutral on silver, and neutral with the euro yen, which is the proxy for the U.S. stock market and the S&P 500, and it's saying neutral. All right, but what about the dollar going into tomorrow? I hear your thoughts. All right, so here is UUP. All right, and this is our tradable for the US dollar. And as you can see, it is too neutral going into tomorrow. All right, it's trying to get itself, though, in a more of a bullish position going into tomorrow, though. Even though it's neutral, it's trying to give itself the nod to relock in on the upside and trend higher. It is possible that that's exactly what's going to happen, is the dollar will be on fire tomorrow. So even though the bears still got it on lock, there's a slight nod going to the bulls for tomorrow, even though the bears still got it. So yeah, very interesting turn of events. And then of course, what about bonds? The elephant in the room. How is this interest rate thing going to handle in the bond market? Well, if you look at ticker TLT, this is our bond ETF, and you'll notice we just hit a new 52-week low today. Right, going into the meeting, mind you. Can't make this up. All right, the nod is going to the bears right now for the bonds, which means we're expecting bond prices to roll over tomorrow, which means yields have no choice but to pop higher tomorrow. Isn't that something? According to the bonds, can't make this up. The bonds are putting their eggs in one basket, and that's to the downside. So yeah, can't make this stuff up. All right. You say what about VET? Let's see. Let's see about VET real quick. Hold on. See if I can do something for you. All right. And you mean the crypto, I take it, right? All right. So here is the VeChain, VET, the crypto. And going into tomorrow, this one has put itself with a rally alert for tonight going into tomorrow's trading. Straight up rally alert. What do you know about that? All right, so this is what this one's ready to do. It wants to rally going into tomorrow. However, though, we cannot ignore the fact that this one here is looking like it could also fall down. So this is either or on this one as well, either or. Just be prepared for anything with the VET tomorrow. All right, but you do have this rally alert for tonight into tomorrow's trading on VET. So on your dashboard, all the information should be there for you. You know, that's a very good question. All right, so the question is, how long will it take for the markets to react to the news? There is a long period, a lag period, right? Okay. Yes and no. Okay, so from a historical perspective, going back to the go-go years of the Fed, which was the 1990s, it was not uncommon at all, not uncommon for the markets to react with a parabolic move. All right, all stock indexes, Dow, S&P, NASDAQ, Russell, the knife, you name an index, it would explode or it would just crash. Back in those days, the average move for the Dow and the NASDAQ 100 was 600 plus points in a matter of 2 seconds. And I'm not exaggerating. It may have even been faster than 2 seconds. It would be like in an instant, the market would just go blah, down 600 or explode up 600 right at the announcement of the Fed. Then you had this cooling off period that seemed to have lasted forever. Right after the last big surprise in 2000, between January and March of 2000, when you had the surprise Fed movement in between meetings, right after that, there was a cooling off period. I would say going up until the late 20 teens, you could trade on FOMC days and it wouldn't hurt you. Those hyperbolic movements would stop. They ceased to exist, like they went extinct. Then all of a sudden, going into, I want to say 2019 to the present, you started to have a mixed bag, meaning you would have delayed reactions as well as sometimes instant reactions. The instant reactions nowadays are not as severe as they were during the height of the Fed in the 90s. However, they still can be tremendous. It's not uncommon also for the market to create a market condition called a fast market, where there's so many orders coming in, it like floods the system, and the price action is jumping and skipping around, where price action can jump or fall 100 points instantly. All right. So trying to get a fill is very difficult in those situations. And depending how bad the situation is, you may not be guaranteed a fill at all. All right. So just keep that in mind. The delayed reaction perspective. Now let's talk about that for a little bit. So historically speaking, you could get these delayed reactions as well. A delayed reaction back in the day, sometimes it would take about an hour or two. And what would happen is you would get a reaction like going into the close. Other times with delayed reactions, this is not really a delayed reaction, but more so buy the rumor, sell the news, where the markets would move and choose a direction going into the announcement. So like if you look at today, what happened, how the markets, fell down today, not too big, but it dropped enough. You could say the market was falling or crashing going into the announcement. So almost like getting everything out of your system before the announcement comes. So if there was any bearishness toward this report, the market is taking the bearishness on the chin now, so that once the announcement comes out, now it can rally. All right, and that goes back to the old perspective. If you follow my channel any length of years that I've been on here, I've always told you the principles of the balloon, the principles of creating a bubble. If they want to bubble a market, they got to crash it first. All right, and if they want to pop a market, they got to rally it first, sucker as many people in, and then you let the thing pop and burst. So that's what's happening now. The market is kind of giving off the vibe that it wants to rally. That's why it's falling going into the meeting. But because of all the economic uncertainty, not just here at home, but also, across the pond, there's just too much uncertainty going on right now. And fear is starting to come into the market. So we truly don't know what's going to happen tomorrow. And that's okay. You're not always going to know what the market is planning. Sometimes the market chooses a neutral position because it wants to surprise you. But here's where the robustness of a trading methodology comes into play. And this is why the rules exist. Now, you can take the trade, you can place your trades ahead of the news just fine, because the system already has built into it what it's going to do. Now, if you read your report on your dashboard tonight, and it says that the market that you're interested in operating in has both a stop and reverse, a long and a short, then you can feel free to take both sides of that trade if those conditions are met tomorrow. All right. But more often than not, the system is going to be a trend follower and follow the prevailing trend in the market. So if going into tomorrow, the market you want to operate in is in a bear market, chances are the bears are going to win. Or if it's a bull market going into the meeting, chances are the bulls are going to win. The most extreme markets in history have always been in the direction of the prevailing trend. All right. And in situations where there was an algo shift, meaning a change of long-term trend, the market always gave out that signal first. Like here on this chart that we have up, this is still the V chain. We have that rally alert, that number 7, that green bar right there. It's giving you that rally alert. So if this market does explode higher tomorrow, You can't say, well, no one knew that, no one saw that coming. Yeah, the system did, because it gave you the rally alert. You dig what I'm saying? So if the systems, if the algo charts are giving off rally alerts or crash alerts, then it's telling you what's going to happen tomorrow. All right. Or within the next couple of days. But if it's not giving you a clear buy or sell signal, then it's telling you that it's the market is sticking with the prevailing trend. All right. So that's where we are with this. So I know I took the long way around, but I wanted to just explain to you, because I think that was a good question as far as, delayed reactions in the market. And yes, delayed reactions can be a couple of hours after the announcement, or sometimes even 24 hours after the announcement. Now, in rare occasions, the market has delayed reaction 24 hours, meaning that it won't do anything that day or wait to the next day, and all of a sudden the market will have an extreme reaction once people have truly digested all the information. The reason that happens from time to time is because, don't forget, your overseas markets don't open until the U.S. closes. So once they've digested what's happening, then they'll decide what they want to do about it. So it's the pile-on effect. So it's just how it is. And no, it doesn't matter. Volume doesn't matter. Back in the day, back in the 80s, volume did matter. Volume is like the VIX. It has lost its impact on the market. Volume doesn't tell you anything anymore. It just doesn't. It used to on an intraday level, it would tell you a lot when you're looking at the price ladders and stuff. There used to be services that don't exist anymore that would show you the orders coming in a huge way. Like you could see all the paper coming in on the sell side or the long or the buy side, and you can make decisions in a split second just by reading the tape. But those services don't exist anymore, and those markets, conditions don't exist anymore. So that would do nothing for you. It just wouldn't. You can do your own research to that, and you'll see what I'm talking about. Volume studies don't do a thing for you. What are your thoughts on Ford Motor? Let's take a look at Ford for you real quick. Let's see what position Ford is starting itself in for tomorrow. Ford Motor. I know automakers in the U.S. have been having a tough time. The auto industry in general has been having a tough time. All right, so let's take a look here. Okay, as you can see, Ford is in a bear market, and it had a huge off today. Very nasty sell-off in the direction of the prevailing trend. So the downtrend has relocked in. As you can see, the bears are clearly in control of this market, and the bears gain the edge going into tomorrow, even after this big sell day. Then the market gapped down, you can see here. So there is the situation of this gap that needs to be back and filled at some point. It doesn't mean the market's going to do it tomorrow. It just means that you do have this gap. So no matter how much lower this thing goes, at some point it's going to need to back and fill and at least close this gap. If it's going to continue lower after it closes the gap, so be it. But for right now, the bears are clearly in control of this market. You had a major algo shift right here on August the 17th when you got your crash alert, and the market has not looked back since. Now, this is a stock that is at $13, threatening to drop below $10. I don't know if, to me, people will be caring about shorting a stock. The most you can make on this is $13 if it goes to zero. It's just better things out there. Now, if you're long this market, the only thing you could do if you're holding shares in this market and you are not a subscriber to the PulseWaves and you just don't want to sell your shares, you bought it when it was what, $50, $60, $70 a stock, and now here is a 13. The only thing you can do is sell calls against your shares. That's all you can do to weather the storm, All right. Those are good questions tonight. So tomorrow we're going to see what happens. We just don't know. We don't know what we don't know. So it's going to be very exciting to find out. All right, smash that like button. You know what it is. And if you haven't already done so, take the leap. Go to pulsewavetrading.com and you can take the 14-day challenge. You can try the Pulse Waves free for 14 days, no charge. See how much money you can make trading the signals over the next 14 days. I think you may be surprised. Also, we have some goodies coming up. We have a new thing that we're going to be offering our current members only. If this is only for members only. If you're not a member of PulseWave Trading, this does not apply to you, but we have a special webinar coming up for you. All right. We have been in the lab cooking up some great things for our members, and you're going to want to watch for that. That upcoming webinar will be outlined on your dashboard as well when you log into pulsewavetrading.com. And with that being said, you know what it is. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.